Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. Markets had a good year in 2017 and investors continued to be rewarded for investing in risk assets. Last year there were a number of issues that had the potential to unsettle investors. The ongoing war of words between the US and North Korea, President Trump's increasingly protectionist America First trade policy, the surprise UK election result that left the government without a clear majority, the threat of populism across Europe that never actually materialized, and, lest we forget, the Brexit negotiations. However, the fact that the world's major economies are all enjoying synchronized growth allowed investors to brush off these concerns, and global equity markets ended the year up 23%. As we look forward into 2018, there's evidence that global growth is broadening out, and attention remains focused on the central banks and on monetary policy around the world. In the US, while there is a general recognition that the economy is late cycle, the general opinion appears to be that economic growth will continue, and that with the implementation of tax cuts in the US, growth may be higher than currently anticipated. Inflation remains in focus, but not a problem. And as long as any interest rate rises remain well flagged, moderate, and in response to continued economic growth, investors appear to be welcoming the move towards normality. The Federal Reserve has hiked rates 3 times now without upsetting the financial markets. In the UK, sentiment remains clouded by Brexit negotiations, and many overseas investors remain underweight the market. However, many UK-based companies appear cheap relative to their international counterparts, and with sterling still low, there is increasing evidence of corporate activity as foreign buyers weigh up the uncertainty posed by Britain's exit from the European Union against the discount currently available on UK assets. In Europe, economic growth is gathering pace. German unemployment is at an all-time low, and while structural imbalances still exist within the EU, the ECB's relaxed attitude to monetary policy, keeping interest rates low, is designed to maintain the economic recovery. The current program of quantitative easing may be winding down, but any rise in interest rates remains a distant prospect. So too in Japan, where quantitative easing remains unaltered, and Shinzo Abe's policies of low taxes and even lower interest rates are being reflected in robust corporate profits and healthy economic data. Emerging markets are also benefiting from the upsurge in global growth. During December, they gained 3.5% on average and ended the year up over 25% in sterling terms. Away from the equity markets, the move towards higher interest rates generally has proved a headwind for the bond markets. This is a new environment for fixed interest securities, and we're likely to see some rotation between high-yield bonds and sovereign issues during the year as investors exploit valuation anomalies, buying high-yield bonds for the attractive returns and then switching back into high-yield issues and sovereign bonds to protect profits. So, in conclusion, 2017 was an excellent year in the face of difficult conditions. As we go into 2018, diversification and investment in quality assets will remain key. There will be uncertainty and the potential for unnerving events. However, the key for investors is not to rely on just one area, asset class, or manager style, but to let diversification across a broad range of assets, currencies, and investment approaches reduce risk and help navigate unpredictable market conditions. Finally, let me wish you a happy and prosperous new year, and thank you for listening.
Hello, welcome to today's review of the True Potential portfolios. My name is Chris Leyland. I'm the Deputy Chief Investment Officer here at True Potential. Before I go any further though, I'd like to wish you a happy and prosperous 2018, so happy new year. The format for today is that I'm going to spend the next few minutes talking about our flagship investment product, that is the True Potential portfolio range. So first, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes we're seeing from our fund manager partners, and finally discuss what changes have been made over the month to the portfolios. Okay, starting off with performance, looking at the month of December, all the portfolios have produced positive returns, and for the full year, returns are excellent, reaching nearly 14%. And this is a result here at True Potential we're incredibly proud of. Over the month, both equities and bonds have been strong, with the UK performing particularly well as we start to make progress through Brexit. Moving on to the performance of the underlying funds that make up the portfolios, the True Potential SCI fund range produced some good numbers, with their fund manager selection benefiting from taking a broadly diversified approach and their factor-based UK exposure working well. The True Potential Allianz fund range also produced healthy returns, particularly at the lower risk end, with the higher overall risk positioning working well in what has been strong markets. Looking at the key themes, which we formulate after speaking to our fund manager partners, our managers have continued to remain positive on the economic outlook. There's a general recognition that we're late cycle, but this viewpoint is not particularly well defined or even indeed quantified. The general opinion appears to be that economic growth will continue next year and could be higher than anticipated if we see positive results from the implementation of the US tax cuts. With interest rates edging ever higher, our managers are more positive on equities than bonds, with a feeling that equity markets can withstand the rise in US bond yields. At a level up to 3% on the US 10-year bond, they see this as a Goldilocks environment with decent growth, modest inflation and benign interest rates. So looking at the changes we've made over the month, the changes are specifically for the True Potential Balanced portfolio. And what we've done is we've switched the holding of Goldman Sachs Dynamic, that's been sold completely, and been replaced by the True Potential Goldman Sachs Balanced Fund. The True Potential Fund evolves forward from the original Goldman's Fund, offering institutional advanced thinking, normally only used for large company pension schemes, and offering this to the smallest retail client. The fund offers true diversification, with the ability to hold assets that are uncorrelated to equity markets. For the rest of the portfolios, no changes have been made, with the four optimization factors of risk, cost, expected return, and risk-adjusted return always being paramount. In conclusion, if we think back, so 2016, 2017, markets have been incredibly resilient in the face of many uncertain events. There'll always be uncertainty for investors, but the key is to hold a diversified portfolio, not just relying on one single asset class, geography, or style. The True Potential portfolios offer all of this, something we feel is essential in changing markets. Okay, thank you very much for listening today, and I will speak to you next time. Thank you.